Welcome back. The markets at this point in time very placid. The cut we saw in early morning has been filled up just a wee bit. So the market is just about 0.1% lower, and the mid caps have actually raced up with a 0.4% gain. In any case, it's a bit of a stable market with the advances 8 stocks in the green to 5 stocks in the red. So placid market, which gives us a little bit of time to ponder over the larger and the more important issue of value investing, of how to pick stocks for the longer term and generate wealth. A person who is adept at this for the past 20 years is Ramdev Agarwal, the Joint Managing Director of Motilal Oswal Financial Services. For the past 20 years, Ramdev and co have been bringing out wealth generation studies or wealth creating studies every year, and this year their wealth creation study is about to be launched later today, the 20th wealth creating study. The theme of that study is mid cap to mega, as he puts it. Ramdev, good morning. Thank you very much for joining us. First, tell us, I mean, it would be always great if you can catch a mid cap stock which is about to become a mega stock, but give us your experience. What kind of times of earnings a person can make if he caught the right stock?
Yeah. So you get as far as the amount of money one can make. If you look at this current wealth creation study, I mean, which we are talking about, 20th wealth creation study, we have 3 categories of companies: the largest, the fastest, and the most consistent. So if you look at the faster ones, I mean, the fastest wealth creating company is, say, Ajanta Pharma. Ajanta Pharma has moved from almost like nowhere. Like in 2010, it was more like a 900 or 800 rank company. So it was a kind of mini company. It was not a mid company. And from 200 crores market cap, it is about 12 to 13,000 crores market cap now. So in 5 years, it has done about 50 times of the money what one invested, and you could buy and you can sell today at about 12-13,000 crores. The same Symphony, Eicher Motor, the larger one, has gone up from about 2,000 crores to 43,000 crores. So almost 25 times in the same 5 years period. So when you get the mid cap or slightly smaller cap company at the right point of time, the study is gone about figuring out how to figure out these companies when they are at that stage. So so the amount of money you can make, I mean, 5% allocation in your portfolio can change the entire profile of what you can make in that 5 or 7 years in the market.
Ramdev, hi, good morning. It's a very interesting report that you have, and you have, pointed out to us a couple of stocks that have moved successfully from mid caps to mega caps. But what do you see as the way ahead in 2016 and 2017? After doing this research, have you identified any companies that are on their path to crossover from mid to mega cap?
Yeah, so it is not. I mean, we have avoided this time putting a specific recommendation onto the companies which are going to cross over. Yes, there are going to be at least 10 to 12 companies in this year will also move from, in next 5 years, will move from mid to mega, and they will create 40-15 times of the wealth. One of the reasons, last year we did the study of 100x, but that's very aspirational, and the probability of getting those kind of companies are very low. So we said, let's go to the next best, that is about 10 to 12x in next 5 years or 7 years. So in that context, if you look at the companies, I mean, you can, I would avoid giving a name of a company which is going to move up there. But the kind of companies, even among the larger cap, look at the companies like, say, the biggest wealth creator has been TCS, ITC, HDFC Bank. Even these companies have moved at about price CAGR of upwards of 20-25%. So I think there is a growth, and in these 4-5 years have been the period of complete stagnation in terms of corporate profits in the stock market. So even in a very stagnant market, it is possible that a business or a company would move. I mean, instead of focusing on which company, I think we have to do our own hard work. But one must accept that now probably market is headed towards a situation where overall market may not move, but individual stocks, individual businesses will get realigned. So my sense is there will be a lot of opportunities and at a stock level and not so much at a market level. So definitely there will be 10, 12 stocks which will make a major move in next 2-3 years.
Ramdev, when you started giving us those examples of big movers, you spoke about Ajanta Pharma, but when you gave us 50x, you said Elder Pharma. You didn't mean Elder, right? I think that was just a slip of the tongue.
Pardon? Elder Pharma? No, I didn't say
no,
anything
you
about
didn't
that.
say. Okay. No, I think it was just a slip of the tongue. You meant Ajanta Pharma, which has moved 50 times. Now, I was looking at your history of fastest wealth creators. This includes Dr. Reddy's, Cipla. It also includes the likes of Satyam, Unitech. So at what point do you get off the fast generators and preserve your wealth?
Yeah, so some of my 20 years studies, experience is that typically the big ones, they do last at the top, but the fastest ones, I mean, they burn out the pace at which they go. So companies like even SSI, this thing in the feet of, that tech boom in 99-2000, you saw Satyam, Wipro, Infosys, but you also saw Global Tele, Pentasoft. So a lot of these companies, Satyam, and then in the reality boom in 2005-07, you saw emergence of Unitech and all these kind of companies hogging the limelight. So clearly when the companies don't have, I mean, it's a growth trap, completely growth trap. I mean, earnings were growing, but there was a complete lack of quality in underlying corporate management and the business itself, and it was cyclical. So clearly one has to be very careful when one rides a very high growth company, and that's what this study is all about. When you look at these companies, the growth companies, I mean, either you are in the growth trap or you're in a quality trap. If you buy quality without growth, then also you don't make money. But if you buy growth without quality, then also you do not make money. So you have to buy growth definitely with the quality, not without quality. So that's the message in the companies which have fallen.
Okay, so if you had to line up, 1, 2, 3 in terms of the key parameters that one has to watch, where would you put growth? Where would you put market share, industry-leading market share? Where would you put management quality? How would you stack it up?
Yeah, so if you look at the qualities one is looking for, clearly one must look for traits of leadership, even if the company is small. What happens is, it looks that you can find industry leadership only in the large companies. It's not so. I mean, even when the companies are mid in size, I mean, for whatever, maybe the business itself is new, or it's a niche. When we looked at, say, Eicher Motor in 4-5 years back, it was in cruiser bike, which was part of two-wheelers, but it was very small, 4-5% share. But clearly it was a leader in that particular segment, and hence you can find that kind of leadership even when the company is 1,500-2,000 crores kind of thing. Today it has become 40-50,000 crores kind of company. So you can find, when we looked at Bharti in 2003, it was just about 4-5,000 crores company. It was the leader of wireless revolution, which was just knocking the door. So clearly you have to look for leadership traits first. I mean, one of the things is that when you identify a mid-cap company, look at whether there is a leadership traits. Very recently we saw the listing of Indigo, and it's a clear leader with 36-37% share of the market and almost 80-90% of the total profits of the industry. So clearly it's a big leader, though it has started off as literally a large company, maybe in the rank of about 105, 110, but those ranks will move if they are successful and the growth comes. So the ranks can move from 100 to maybe 50, 60. I would put the possible rank for this company to be more like 50, more like around 50 in next 2-3 years. So clearly this kind of rank change, positioning change can give you large opportunities.
Okay, Ramdev, actually, you borrow the phrase from Charlie Munger and you speak about the Lollapalooza effect. Basically, that refers to a whole host of factors coming together. Since you referred to Bharti, a huge new technology from landline to mobiles, as well as a time when India was on the cusp of a very big growth rate of, from 5% for the last 10 years to 8% for the next 6 years. So tell us more. Is that combination of factors needed to make a mid stock a mega stock?
Yes. So the way we have gone about writing the report and the way I look at personally is that we call it QGLP. I mean MQGLP. So M stands for mid-sized company, quality of business, quality of management, growth in the business, and the longevity growth and longevity quality, and then at a reasonable price. When all these 5-6 factors, size, quality of business, quality of management, growth, and the long-term growth and long-term quality, and at a reasonable price. When all the 6 factors come together, it's a kind of some kind of a Lollapalooza effect. I mean, it's all forces coming together. Can you buy a tremendous, a leader company growing very rapidly and growing for 5, 10, 15 years at a very, very reasonable price? So whenever you get this kind of opportunity, you must buy a lot. And in the world of 3,000, 4,000 listed companies, these things keep happening. So, and iShares is a Lollapalooza effect, or emergence of Infosys in '93 till about, I mean, it's a 6,000 times in last 20 years. I mean, this is not a normal phenomenon. So when you want to make extraordinary money, you have to look for extraordinary confluence of events around that particular company. And you can keep watching. I mean, it's not that one gets a notice of this kind of phenomenon, but you can see over 1 year, 2 years, 3 years, even if you have missed out 2, 3 years of the story, then in next 7, 8 years, you can make a lot of money. So we have seen like companies like HDFC Bank. I mean, this is not an ordinary phenomenon that they get private sector bank license in '95, and after listing at 40 rupees, that was about 800,000 crores kind of market cap. Today it is 260,000 crore market cap, and still growing at about 25% compounded. So till about 2000 you bought it, you still made it 100 times in next 15 years. So I mean, this confluence of event has to be watched in the corporate world.
All right, Ramdev, it was great learning from you as always, the Lollapalooza effect. We'll remember that and all of the stocks that we discussed as well. Thank you so much for talking about this wealth creation study. Do remember, you can catch Ramesh Damani and Lata